Hi, I'm Rob the accountant. Today I want to talk about business insurance. We had a local business that had a loss and things are moving slowly for them, and often this is due to insurance being misunderstood. Let's discuss. Business insurance can be purchased bundled via a BOP or business owner's policy, or it can be purchased monoline, which is individual components tailored to your specific business. Property, equipment, and liability. First, when talking about insurance with your agent, honesty and less bravado is key here. Honesty and less bravado is key here. Why is that, Rob? Here's why. Insurance companies want to make money and not pay claims. Business owners want to not pay premiums while having max coverage when it comes to claims. As we move forward, and why I say honesty and less bravado is important is because although each party wants the advantage, the law typically favors what the language of the policy puts forward and what the business owner put forward on their application. Therefore, if you're a carpenter who works nearly all the time as a carpenter, but on occasion you engage in plumbing, but it's really insignificant to your carpentry, then being honest and identifying its true revenue breakdown of how much you make with carpentry and how much you make with plumbing will result in coverage that is risk calculated to your situation, resulting in a true premium rate basis. What often happens is business owners embellish what they are doing, or they put forth what they think is important. For example, saying they made X when they made way less. The more a carrier questions your operations, the more the insurance is going to cost you and the more you're going to pay. Okay, so I'll run through types of insurance. I'll give a brief example of its lines of coverage and try to indicate examples of what you can do to inform your agent and your carrier of items that may provide policy credits to lower your rates. Commercial General Liability Insurance, CGL. It's the one everyone needs and one of the most asked binder requests. Put simply, CGL covers everyone around you for your errors or your negligence. Examples would be a carpenter runs a nail through the plumbing, CGL. Plumber makes error, basement floods, CGL. Customer slips or falls outside of your store, CGL. At the minimum, every business, sole proprietor, DBA, partnership, or corporation should have general liability. There are simply too many people looking to make you pay them $1 million, and the best way to cover yourself is to be precise with your operations. Be precise with what you're earning, because most policies rates are based on revenue in. Most policies rates are based on revenue in. This also means be proactive with unexpected jumps in revenue. And always remember that the policy language allows the carrier to audit your books. And so as we move on to the optional business lines of coverage discussion, we will see how keeping accurate and good records actually strengthens the business owner's hands. Property coverage. Typically, property coverage is separated into two categories. The first category is if you own the building. In this regard, it's never unwise to insure for the value of the property with an inflation rider or some replacement cost and adjustment increase. It's also wise, if this is a building of operations, to make sure you have a properly accepted appraisal of not just the cost to rebuild the building, but the value of any operations of the building and their intrinsic value, excluding equipment. The second category is if you rent a building. Typically, most CGL policies have $100,000 allowance for space rented to you. That said, you have to be careful because the liability limits of CGL policies are not technically directed to property coverage. Even in a BOP, the property will have a line item dollar amount as it relates to max payout for the building. So on a typical CGL, even though you may have $100K of insurance for the damage of the space you occupy, what about the 7 other businesses that had losses due to you? Not only would you be liable for the loss of income of these other operations, but also the cost to rebuild their units. Therefore, even in this second category, it's best to look at how your operations can affect others and price to that position. Nothing like angry people when they hear your policy doesn't cover anything and they all come gunning for you. Equipment and tools. So insurance, there's going to be some considerations, like if your coverage covers your tools, computers, and devices like literally everywhere, or just at specific locations. So here's my view, and it's going to be situational. If you have a factory with specialized equipment and machinery, then you're going to most likely want to insure equipment and tools and do so by a scheduled endorsement. Rob, what's a scheduled endorsement? And why do I want one? Well, great question. So not to bore you any more than you are, what you are doing with a scheduled endorsement is identifying the item to the carrier and assigning a replacement cost value agreed to by both the insured and the carrier. In fact, everyone or anyone with a homeowner's policy who has jewelry, guns, or computers, please, a lot of these policies restrict this amount to under $2,000. So if you have a home with 5 computers, the fire destroys 5 of the computers, they're only going to replace $2,000 worth of computers. Refer to your policy language to verify your situation. The truth is, this part of insurance is the most expensive and the most vulnerable to fraud, which is why I'm a fan of just watching over my own stuff. I know folks may think otherwise, but you only need so many saws, drills, generators, or power tools unattended. If this is your business, then travel with hardened security and insure from there. However, it always comes back to honesty and less bravado and understanding your policy language. Finally, business income insurance. So this is really under the same consideration of whether you insure your tools or not. Business continuation insurance covers the income you would have earned had you not had a loss, or in the event your co-tenant burns down your business with theirs. In any event, the considerations are going to be how much and how long. There will be significant cost premiums and are 100% directed to the honesty, records, and purchase history of your business. Again, this is going to be situational. If you have a factory with specialized equipment and machinery and employ a ton of folks, then you're most likely going to want to insure for the continuation of income. And I go so far to update the profit and loss every 6 months with the agent carrier. This reflects an accurate reporting, especially where employee considerations may be present. If you're a contractor or non-cash registered business, the coverage might be outside of your scope, because regardless of what any agent may assert, the truth is a carrier would simply replace your tools and send you back out to the work. The idea that you could support in the same fashion as a restaurant or a manufacturing plant sustainable income losses with most big insurance companies as required for a claim payout is nearly impossible. Of course, this is my view, and you should always do what's best for you. So, I thought I was going to go into some of the employer insurance benefits for employees as well, but I'll do that another time. With insurance, it always comes back to honesty and less bravado, and understanding that your social media presence may speak more than the words on your application. I'm Rob, the accountant. I hope you've enjoyed this presentation, and I hope you have a great week.